Oh man, I may not have been uh, in audio, so I apologize if you couldn't hear me. Welcome to the SRT live show with me, your host, Sean Richard with the Sean Richard Mortgage Team. Home prices soaring. That is our headline for today. So we're going to talk a lot about homes today. We're going to talk about home prices. A lot of data came out between last week and this week. So we're going to jet into that. And then we're going to talk a little bit about the Fed as well. So let's go on this journey together. I've got some cool information to show you a little bit later, and we'll dive into that as well. So let's talk about last week and the information that we got. So as always, last Thursday, we got jobless claims. This is unemployment claims. We get initial claims and we get continuing claims. Initial claims are people filing for unemployment for the first time. And this is week over week numbers. And so the prior reading to last week was 231,000. And it came in pretty close to that. We got 229,000 last week. And the reason this is so important is we want to watch the trend in unemployment filings. You know, I've been talking a lot about a potential recession, and one of the big indicators of recession is unemployment starting to tick up, reaching a bottom and then ticking back up. And so we've been sitting in the high, 180, 190, 200,000, upwards of to 220, 230,000 unemployment claims week over week for a while. So we want to watch that closely. If we start to tick up into higher numbers, then that's going to be an indicator that we want to watch. Continuing claims, these are people renewing their unemployment benefits. Previous reading was 1.31 million, stayed in that same range. We were at 1.315 million. So good to see that consistency. Again, just something that we want to watch. We also got new home sales. And so month over month, our annualized rate was up 10.7% to an annualized pace of 696,000. Now, this is contracts on new homes for the month of May. There's a little bit of a lag there. And so 696,000 annualized pace, and that was up 10.7%. And the previous month was revised higher as well. And I'm going to break this down a little bit further here in a minute, but inventory is not what it seems. And I'm going to go into that a little bit more. We also got consumer sentiment last week. And this is important because this gives us the pulse of the consumers, the pulse of the country. And so the previous reading was a 50.2, which is pretty low. This time around, we got a 50 flat. Now, that represents the lowest reading that we've seen on record since 1978. And so consumers are feeling it. I don't think that's a surprise to any of you. Consumers are definitely feeling the pain from inflation, both in and out of the housing industry, the real estate industry. So consumers are feeling pretty bummed out about where the economy is right now. And hopefully with what the Fed's doing, we can see some improvement. All right, so let's get into the amazing data of the day. So we got two housing index reports today. We got the Case-Shiller housing index report, which showed month over month home price appreciation up 2.1%. It's about where it was last month. And then year over year came in at 20.4%. This represents an incredible appreciation level on a year over year and month over month basis. Essentially, housing is staying strong. Now, this is also on a bit of a lag. This is for the month of April. So April is when we really start to see interest rates kind of climb up. We got north of 5% in April. And so even in the face of rising interest rates, we're seeing housing remain really, really strong. So as real estate agents or home buyers, you want to be able to know and communicate that the housing industry, despite everything that's going on, is staying really, really strong. Now, we also got the April numbers for the FHFA housing index as well. And this is home price appreciation on single family homes with a conforming loan amount. And what that means, conforming, for any of you who don't know, is simply anything south of a jumbo loan. So right now that number is in the 600,000, the mid 600s. So anything South of that is considered a conforming loan. So you could have a $1 million, $2 million home that's got a small mortgage on it that would fall into this category. Obviously a lot of the housing in our country actually has no mortgage, a good chunk of it. But this measures single family with a conforming loan. And month over month, that was up 1.6%, and year over year, up 18.8%. But what's also important to note is that March was revised higher to 19.1%. So we've got two different reports exhibiting that our housing market and home prices are continuing to appreciate at very, very high levels. Now, we're not going to be able to maintain these high levels forever. We're going to see them decrease, but we're not going to go from up 20% to down 20%. We're likely going to see that 20% number dwindle a little bit, and we might end up 10 or 5% in the positive. So we're going to continue to see housing prices improve, but it's going to slow down a little bit, even in the face of recession. And I'll show this to you real quick. So, we've got some data from MBS Highway, and let me show this to you. So this is some pretty cool stuff. So this is the chart of the Case-Shiller. So I just said we got the Case-Shiller Home Price Index. This is a chart of the Case-Shiller Home Price Index dating back to the 1960s. You can kind of see it there at the bottom of the screen, to the 1960s. And so this line represents home prices, and these dark vertical bars here indicate periods of recession in our country. So you can see through periods of recession, we had almost every single time home prices continue to increase. Here we saw it plateau a little bit, but shortly after we increased again. We just increased right through that mini recession. Now, the only exception to this, as you can see from this chart, is 2008. And in 2008, what we have is we had the bubble that caused the recession, not the recession that caused the bubble. You can see here we started to turn before we went into recession, and this was not your typical annual, or not your typical cyclical recession. This was definitely more of a crash. So I wanted to show you that to just to illustrate and really put an exclamation point on that housing is staying really strong. Now, we also got the pending home sales yesterday. And so month over month, pending home sales up 0.7%, which was a huge surprise to the upside. The previous reading month over month was down 4%. So really interesting to see that tick up. And that probably has something to do with a little bit of increase in inventory as we got into the spring and summer buying season. Now, looking ahead this week, we've got some important news tomorrow. We've got the Q1 final GDP reading. The last reading was negative, and so that's expected to be seen again. And remember, the technical definition of a recession is 2 consecutive quarters of negative GDP. So this is the final reading for Q1, and we're going to have to see where Q2 falls. We're also going to hear from Jerome Powell, the Fed chair, tomorrow as well. Anytime any of the Fed members speaks, it always has the potential to move the markets, but especially when Jerome Powell speaks. So let's keep an eye on that. Thursday, as usual, we get unemployment claims, jobless claims. We also get the Fed's favorite measure of inflation, which is PCE, personal consumption expenditure. And so we'll go over that next week. And then on Friday, the bond market closes early for the holiday weekend. So that's what we've got coming ahead this week. So let's take a quick moment and let's dive into some inventory information, because we're seeing a lot of data about, or I guess we're seeing a lot of information, media talking about inventory across the country and in our area. And so I want to talk about real inventory. And so let's dive into new construction. And I'm going to share this with you here. All right. So new construction inventory. So right now we've got roughly, here we go. There we go. We got roughly 444,000 homes for sale. As I mentioned earlier, we're at an annualized pace of 696,000 homes. And that means we're on a monthly sales pace of 58,000. So if we do the math, that means that we've got about 7.7 months of inventory that we're 7.7 months of inventory supply. However, let's come back and let's look at this number up here. Okay, this 444,000. These are for sale, but it does not mean that they are constructed homes ready to move in. A lot of these are just dirt at this point, or they're in the process of being constructed. They're not habitable at this point. So the actual number of homes that are completed right now are right around 37,000. And so at our monthly sales pace of 58,000, we actually have less than 1 month of inventory supply available in new construction. So although we've seen a tick up in inventory, I want to make sure that we're focused on the real inventory, and we can communicate and communicate this information to our clients. If you're home buyers, you can understand more about the market and why you're seeing things happen the way that they are. So this is new construction. Let's take a look at existing homes because we see a similar pattern here. So we've got a total. Here we go. Yeah, we've got a total of about 1.1 million homes. We've seen that tick up. A couple months ago, we were down in the around 900,000. So 1.1 million homes, and we've got a monthly sales pace of existing homes of about 527,000. And so you do the math, and that gives us about 2.2 months of inventory and supply. However, of those 1.16 million homes, a huge chunk of those are already under contract. They are pending. They are not available to purchase because somebody else has already put a contract on them. So the actual amount of active listings nationwide is around 516,000. At our current monthly sales pace, that means we actually only have about 1 month of supply. 88% of homes selling within 30 days. And so inventory, although it's picked up, which is awesome, I love to see it, is still staying really, really tight because of what's being stated and what's actually available are two different components. So I wanted to share that with you. The last thing that I want to share with you today is I'm going to talk about the Fed rate hikes. So this is a great chart that talks that we got from NBS Highway, and this shows the recessionary periods in our country again, but it shows the Fed funds rate. And so you can see here, almost exclusively, with a few exceptions, when the Fed increases the Fed funds rate, see right here, when the Fed increases the Fed funds rate, actually, let's do this right here, we see a recession. We see a recession. We see a recession. Okay, so you can see the point I'm making here. So with the Fed consistently increasing the Fed funds rate this year, especially by the margin that they're increasing it, there is a high likelihood that we're going to end up in a recession. So planning accordingly, strategizing with how to best serve your clients if you're a real estate agent, if you're a home buyer, strategizing on how best to navigate this market with the pending recession coming up. Those are important questions and paths that need to be traveled. And that's where my team and I come in. We have the ability to really help navigate, strategize for you as real estate agents, help you do more for home buyers, help you understand where the market's headed, where the economy's headed, so that way you can make the best educated decisions for your financial future. And that's what we aim to do. So really good information. I'm going to post some of these in the comments below, so check them out as well. But that's what I've got for you today. I really appreciate you joining me on this episode of SRT Live. If you have any questions about the information today, don't hesitate to reach out to me at the contact information here. As always, my team here at Guaranteed Rate, the Sean Richard Mortgage team, we're here to help you as real estate agents do more, serve more clients, and we're here to help you home buyers navigate the market and make the best possible decision for your financial future. So thanks so much for joining me today, and have an incredible rest of your week. Take care.